from my boy Spencer. Good morning, guys. How we doing? Welcome to it. Welcome, traders and investors, to Pre-Market Prep, where you guys get all the things that you guys need to get ready for the market open. Today, we got a lot to talk about. We got Bank of England raising rates. We got Lucid for my Lucid dreamers out there. We'll talk a little bit about Clorox, Eli Lilly, Alibaba, Penn Gaming, Wayfair, Cigna, Datadog. We got a lot to talk about. There's more earnings on out there. So if there's one earning that's got your attention, definitely throw it up in the chat. We'll go ahead and catch it and make sure that we touch it. Let's dive on in today. Our special guest, none other than Marc Chaikin. We're super excited to always have Chaikin on. Let's dive in and see what the guys see in this market. Is the bull market back, baby? We'll find on out.
Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your host, Joel O'Connor.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
All right, let's go ahead. Let's bring on Joel O'Connor and Dennis Dick. Let's take a look at this market. In technical terms, we're almost back to a bull market, baby. Up 19% on kind of the NASDAQ. And if you look at it also the Qs, 20% is considered, you know, what
we're up 20% from the lows, eh? That's impressive.
Yeah, almost there, man. Almost to another bull market, baby. We'll see what happens. Let's take a look at the futures action. Joel, if you can share your charts, we'll see what happened overnight. And the question will be, will we get back into that rip and rally and stay up here as we keep lifting? No turnaround. The bears are hiding.
Took a look at yesterday's high. That's an important number. 41.70 went to 73.25. And just kind of leaking off that, not back at unchanged. Pre-market low, not much there, 41.48. That was the area of a couple highs. So definitely staying above the pre-market low, important today. Let's take it crude. Crude, you 130, people. You got a ways to go now. Lost a couple bucks yesterday. Up 63 cents at 91.28. We got to clear that 92.5 to get back in the rally mode. Silver and gold are both strong this morning. Gold up 26.40 at 1802.80. Silver up back in the 20 handle. Keep an eye on 20.5. We had a pair of highs up there before the little decline yesterday. Up 44.6 cents. 20.33. Bitcoin down a tad, 530, 23,010. Ethereum futures, they're down $30 at 1628.50.
All right, we got to be paying attention today to see what we get from the initial jobless claims. That's the first thing that I just want to state right off the hop. The consensus is 259,000. Prior was 256,000. We're watching to see how the labor markets hold up. It's something that definitely the Fed is watching. I also saw mentions out there about 2 missiles launched in China, but of course this was in the drill zone, so not really affecting the markets now. Something that we're all going to keep on watch to see what happens there in China. And just to wrap it up on the macro side, the Bank of England on Thursday hiked interest rates 50 basis points in the largest single increase since 1995, as it tries to also keep up with runaway inflation.
Lots to ponder. We will say that much. There's lots of balls to juggle, like we were saying. The bulls are in complete control here right now, and I think they remain in control until something happens with China. That's going to be the wild card, and the timing of that is impossible to predict. So all I'll say, is I'm cautious. Obviously, I've sold some stocks because I think there's an eventual rug pull, but the timing of that rug pull is nearly impossible to call. We are getting through the earnings season. There's been some disappointments, but for the most part, it's been okay. Good enough is good enough. Expectations were in the gutter 3 weeks ago when we were buying stocks. I'm just taking the profits for the most part on everything that I bought 3.5, 4 weeks ago. And that's what I've been talking about on the show, because I don't want to sit here and all of a sudden, we're down 1,000 points because China's pulled something. So that's my concern. But we're climbing the wall of worry. Does it feel like we're going to 420? Yeah, it kind of does. Does it feel like China's going to do something, in the next 24 hours? Probably not. We don't know when the timing of this thing's going to be. I mean, there's doing some missile tests, but, for the most part, it's been, quiet since the Pelosi visit. But I think there's going to be problems here eventually. And that's why I'm just booking the profits that we've already made from the latest run. It's been a nice run. We're up 19% from the lows, like you said, Mitch. It's been a nice run.
And what about the whole other contingent out there that missed the rally and are waiting for the China thing to buy the dip?
Well, there you go too, Joel. I mean, there's that FOMO. That's what keeps driving us every time we dip a little bit here, Joel.
Yeah. So if we got a big dip,
there's a lot of money on the sidelines. Yeah.
Yep.
So that does continue to drive us. That is an issue for the bears, undoubtedly an issue for the bears to deal with. I would just say it depends on where your overall positioning is too. But I think I find it hard to believe that that we're just going to get a one-day dip on whatever the hell China does, and then we're just going to continue to climb. I think it's going to be more supply chain. Like I think they're going to I don't think they're coming. I don't think we're going to war. Like I said, the supply chain has all been screwed up from China. They could really, really screw it up for once, and for us if they really want to. And the whole source of the inflation that we were experiencing originally, Joel, was from the supply chain. So if they want to really screw us up, our economy, they have every capability to do it. But I mean, until that time comes, this market doesn't care right now. It's in full honey badger mode. It's ignoring all other risks. And it thinks we're by inflation, and it's like, rah, rah, let's go. Like, what do you think the catalyst for yesterday's rally was? It's very obvious. Do you know what the catalyst was?
The catalyst yesterday.
Why did we rally?
We had some decent earnings reports, and I think technically, I mean, I look at it. We took out a major level. What
None of that.
You
want to know why we rallied yesterday? Oil was down $3. Everybody is looking at inflation and saying the commodities are coming in hard, and we're buying tech stocks when oil is down. Oil got hammered yesterday, and they turned around and they started to buy the hell out of the tech stocks. And that is the reason that we were up so much yesterday. And that continues to be the reason as the commodity trade comes off. And I mean, this 2022 has maximized punishing the maximum amount of participants, because think about, they're all selling tech stocks. Oh, you got to get in commodities. You got to buy oil. It's going. This is, we got to buy. We're going to $150 a barrel. They have just literally pulled the rug out from all the commodity traders. They've all been crushed that way too. And then they turned around a month ago and started buying the hell out of the tech stocks. There's a perfect inverse relationships. This is what I'm all about, is relationships, identifying them. Perfect inverse relationship right now between oil and tech growth stocks. And oil down yesterday is equal, and Kramer even pointed out. Kramer pointed out on Mad Money, so he's even noticing it now. When oil is down and getting hit, they're buying the hell out of the tech stocks. And that is why you saw this ridiculous move up yesterday. And maybe that continues. But if we end up getting into a war situation, oil starts to go back up, they'll pull the rug out from under those tech stocks too. So just be aware of those new relationships that have formed now. And right now, this market cares about oil and commodity pricing more than anything else.
I would have to agree, and something to keep on watch. Just to mention there, of course, yesterday's surprise of 4.5 million barrels in the stockpile there definitely was not what was expected. Was expected actually was a negative number there. Expected to decline, and the gasoline stockpiles actually grew, which was the kind of flip side there that Dennis mentioned. All right, let's get out of the crude talk, inflation. We could stay on this all day, but I want to touch a little bit of a topic before we get to Marc Chaikin. Let's talk about the lucid dreamers, baby, because they got the surprise put on them with the numbers that came out here. This was unexpected here. Lucid dropping here very early, and I saw this when I saw this, I was really concerned. Delivering only 1,405 vehicles in the first half of the year. Of course, the original forecast for the year was 20,000. And then now they're going to go ahead and change their production volume outlook to 6,000 to 7,000. The EPS came in here at 33-cent loss, beating the 36-cent loss estimate. Sales at 97.3 million, missing the 145.49 million estimate. Huge miss on that sales.
The one thing to consider is we're in this buy the dip mentality in tech stocks. The second thing is, Joel, as you're going to point out, what support we're coming into on LCID. I mean, 17. This is crazy. I mean, 1, 2, 3, 4, 5, 6 of the last 7 days we have bottomed between 1777
right there.
and like 1785, and we're right there again. So don't tell me technical analysis doesn't work, because sometimes it really does. It may not dictate the direction of the move on an earnings report, but after the earnings report happens, it sure as hell does, hold sometimes. And right now we are holding support on LCID, similar to Shopify. Remember Shopify? And we sold off, and we got right to that support level, and we hung out there in the entire pre-market, and then we turned around on it. So I'd be very cautious going bearish on stocks that are at those key support levels. Support is support until it's broken. Right now, LCID is on critical support. It sets up for risk reward to buy this dip right here, stopping yourself out, let's say like 1730 or something. So, give yourself a little bit of wiggle room. But, and obviously we don't know what's going to happen with the rest of the session, but this sets up as a buy the dip opportunity.
I'm on the opposite side here. I've been waiting for this to come down, and I think this is just kind of fulfilling the story that Lucid isn't what we are dreaming it up to be.
I don't think it is either.
Vehicle driver, and I think that with 1,405 vehicles and only 97 million made, I think this is a short. But hey, to each his own.
I think, yeah, but nothing about to each his own. It's about timing. So right now you're at support. I personally, Mitch, I'm on your side. I think Lucid goes. I've said on this show before, when Lucid was $50, I said I think it's a $5 stock. I've said that before. I've said that on Lucid before. I think there's a potential that Lucid is a $5 stock. But right now we're not in that market. We're not in that like, okay, let's bat down the hatches and kill every stock. They're looking for dips to buy. So it's all about timing. So, I think you're going to end up being right. I think Lucid could end up going a lot lower, but there's no way in the world I'm shorting it on this support until I see, one, the support clearly broken, or two, I get a China rug pull in this overall market. Because right now, this market is hungry for any tech stock that's coming on a dip. I mean, look yesterday, AMD dips. They buy it. Airbnb dips.
Yep.
They buy it.
That's true.
There was how many other ones yesterday? Like there was like a plethora. There was a whole bunch of examples. Not tech. Yeah, only tech stocks. That's what they're hungry for right now.
Even
other stocks like Caterpillar that have dipped, Caterpillar continues to go down because it's the value trade. It's the commodity trade. It's not what they're hungry for right now.
Yeah.
They're hungry for beaten down, no money making tech stocks. That might change. Could change overnight. Could change. China pulls the rug, changes. Everything changes. But right now, we got to trade what's in front of us. And I think you could be early on that trade. I think you're going to end up being right, Mitch. I just scared you could be early.
Definitely. I would be looking at it more of a swing. I'd be looking for pops into resistance. We'll see what happens there.
And selling the rip too. Like, who wants to short a stock that's down 13% in this market that has clearly, like you just said, turned into a bull market in the last 3 weeks. So, and maybe it's going to take out support, but you can see right now, Joel, you're their technical analyst here too.
Yeah,
you can see this is holding support right now. At least it's trying to.
It's open to it. The initial spike down was a little bit lower than that, 1741. I would say if the buy the dip is going to work in this today, this is going to get an 18 bid. It's gonna. I mean, I don't think we're gonna get back to yesterday's range, but I would just pivot at 18 here. If they could get what I would be very careful of is like open up at 1770, go to 1805, and then all of a sudden you're clamped back down at 18. So let's see what happens early. There's not much here, just one daily low at 1731. and then it really falls off a cliff. But
And,
it's a
and that
big
might be
move.
the thing to do. If you're scared of this support and you think it might get taken out, maybe you wait until you get a feel for the regular session. You see, and you start going up over 18. You're like, okay, that support held once again, and then stopping yourself out. But the key is, with any trade, you can put on anything. I've always said that you can put on any trade you want in any stock you want. Just know where your out is. Always have that contingency plan on where I'm going to get out. Never let the trade become the long-term investment. Never, ever let that happen. My trading account, like I said, goes to 100% cash every single day. My day trading overnight account goes to cash every single day at 10 a.m. or 10.
You don't want to be left like the Monopoly guy with a whole bunch of bags.
No,
No one wants to be
this
the
is what
Monopoly
happens.
guy.
This is the difference. This is the difference between somebody who's doing this, for 22 years successfully, and somebody who's done it, through 2020 for 6 months successfully or a year successfully. It's not that I'm good at calling stocks. It's not that I make good market calls. It's that I'm disciplined and that I get the hell out when I'm wrong. I'm wrong all the time. You're a trader. You're going to be wrong lots of times. If you refuse to take those losers, eventually those losers will take over your portfolio, take over your trading account, dominate it, and just slowly take away your mental capital and your physical capital.
All right, let's go ahead. Let's get into our interview today. Let's bring on my man, Marc Chaikin. Excited to go ahead and dive on in. Excited to see his outlook. Let's dive on in. How are you doing, Marc?
We're doing great. Let's start with Lucid, and then we'll get into the market.
You enjoyed that one too, Marc?
Well, I guess you guys are talking to day traders because less than 200 million in revenue, and it's got almost the same market cap as Shopify. It's got 34 billion in market cap. Shopify has 5 billion in revenue and a $50 billion market cap. If you're looking for opportunities, look for it in Shopify, not in Lurid.
Yeah, Shopify has just run here to your point, and we are talking to day traders here, Marc.
Yeah,
but Shopify just ran. So if you're listening to the show like a week and a half ago, we were talking the same exact conversation with Shopify, and I was saying I would not sell it at the 30 support. It's just held for too long.
Exactly.
And now it's 42, so I would actually be selling probably into this strength. The profits that we just took from 6 days ago. So all I'm saying is there's a trade setup here on Lucid where the buy the dip has worked so much this earnings season that it could hold again. I'm not saying it's going to hold, and I agree with you, Marc. I just agree with Mitch too. I think long term Lucid's going lower, but I think short term this market is all of a sudden hungry for anything, and it's buying dips, and dip buying is working again. So I go with what works, and as a day trader right now, buying the dip continues to work.
Well, in addition to cutting my losses, I like to focus on maybe 20 or 30 stocks max for trading. And so I want to take things off my screen that aren't a real company.
Yeah.
This isn't a real company.
I agree with you there too.
So that's my only point.
Marc,
focus on the real company.
I just want to take your point there too. That's an awesome point you're making, because I think a lot of traders struggle because they're over here, they're trading here, they're trading here. They're always like chasing what's moving, chasing around. But if you focus on 20 to 30 stocks, we used to teach that exact thing at Bright Trading. Focus on like 20 or 30 stocks, make them your bread and butter. You start to understand those stocks. You start to get a feel for how, maybe the designated market, it used to be the designated market maker, used to have more control, but you get a feel for how those stocks trade. Marc, that's such a fabulous point you're making.
I appreciate that. So let's get to the market, Joel. I put my feet to the fire. I didn't miss the rally. I've missed the move since 4,000 because I did expect them to get to 4,000. So we've now had a big extension beyond that. And the question is the bear market over? And my answer would be, if it is, then it's going to be the only bear market since 1950 where you didn't have capitulation. You didn't have people puking out mutual funds and ETFs. You've actually had an inflow this year into ETFs. So what I see as the dynamics going on is exactly what you guys were talking about. Advisors are historically underinvested. Hedge funds are still short tech. Part of the rally we've seen is hedge funds covering tech.
Yeah.
And you've got the individual investor, because that's who's buying the ETFs, putting money into the market. So I'm watching the Mcclellan Oscillator summation index. In every reversal from bear to bull, the Mcclellan has gone to between 800 and 1,000. And then you've got a history of that back to 1960. And it's now at 328, and it's had a nice swing up. So what is the Mcclellan Oscillator? It's just the summation of the Mcclellan. What is the summation? Just every day you add in the value of the Mcclellan Oscillator. And so it's a measure of advanced declines. Now, people are going to say there aren't as many equities as there have been, that the New York Stock Exchange is dominated by exchange traded funds and non-equity indices. Doesn't matter what you look at. You still haven't achieved liftoff level, even though the rally's impressive. So in the NASDAQ, you're at 19.9%. In the S&P, you're at about 13%. I just don't think it's over. And that's where I am. You could get to 4,200 here. You could even get to 4,300, which would be the 200-day average on the S&P. But I think if you're putting money to work at these levels, you're going to be sorry in 3 months.
It's tough. I'm worried about China. I don't know what your thought process is, but I'm worried that this Pelosi visit obviously pissed Xi off significantly here. I'm worried that they could just take repercussions in the form of screwing up our supply chain again. That's what I'm scared of, because that was the source of the original problems, was the supply chain got all screwed up and then inflation took over, and now we're still trying to recover from the supply chain issues. If all of a sudden they decide to want to screw up our supply chain again, it would open a whole new can of worms.
Yeah, my only issue with that point of view, and I think it's a good one, is typically it's the things we don't focus on or we don't know that bite us in the stock market. So I'm more in the camp that it's continuing negative forward guidance and analysts lowering their estimates, which then sees a revert out of tech and back into things like energy. Because if we see 200 to 210 in the S&P estimates, you could easily get a 15 multiple on that and see the market at 3,000. Do I think that's going to happen? I actually don't know. Do I think we're going to test 3,600? I do. But I think it's going to be based on earnings and where analyst estimates are headed. And, that we're going to see what happens with estimates after the second quarter earnings season is over, which is in a week or so, week to 10 days. And let's see if analysts can stand up and keep their estimates where they are, given what they've heard from forward guidance.
We're on the line with Marc Chaikin. Chaikin Analytics joins our show every 2 weeks to give us his fundamental and technical outlook on the markets. Marc, as far as not seeing capitulation, I think there's a lot of investors out there that feel that they've seen capitulation in some of the issues that they own. I mean, you can look at a lot of stocks in the tech sector. I mean, washed out, just under 300, single digits in Square, PayPal, Shopify. We could just go on, on down the list. So, even in some of the big mega tech cap stocks, I mean, we came back down to, something for Amazon came almost back down to the COVID lows. I mean, you don't think that, Amazon's in much better shape, financially, making money as it was a couple years ago. So I don't know. I mean, there's other reasons why the market go down, but I just think the capitulation thing, I think you've already seen it in across the board. And the last leg lower is when some of the big tech fell.
Well, I agree with you, and that's why since November I've been talking about a rolling bear market. That swings from tech, which peaked in February of 21, as you know, with Kathy Woods being the poster child, to every other industry under the sun, including energy here in the last 3 months, as you've gotten a swing back toward tech. But I still go back to the notion that there are two ways to measure capitulation. One is through advanced declines. The other is through money coming out of equity funds. And we haven't seen, in terms of the various indicators that I look at, like the Mcclellan Oscillator, the Mcclellan summation, 10-day advanced decline, whatever you have it, you haven't seen the extreme readings that tell you that people are scared. And until people are scared, I don't think a bear market bottoms out. I've done a deep dive in the last month on every bear market back to 1960. And so could it be different this time? My mentor, Stan Burge, used to answer that question with, yep, maybe, but I don't think so.
And you use the term like rolling, bear market. To me, the market feels now like they were just kind of like a, rolling. I don't want to call it bull market. Would you might get in trouble using that term, but they're finding other things to buy. That once again, the rotation in the market can keep this market afloat for a long time, and now your big cap tech had a nice rally. I mean, your growth tech is coming back. Your biotechs are coming back. Are we at that point again where it's just, well, we're really, I kind of feel it's hard unless the China rug pull, which gets a lot of pub on this show. If not, it just seems like they're just looking for stuff to buy, and I think that was evidenced this earnings season, where even some not good sub reports were bought up. What's your take on just the rolling rotation that just keep this market afloat?
Well, a biotech has been something we've liked now for 3 or 4 months. So, and they're all making new highs. So I don't think you can buy biotech here. But we're sort of mimicking a 20-year pattern. This is the old GAN stuff that I'd never been able to make money with, but I've now got an associate who knows how to make money with it. If you look back to 2002, you've got a perfect analog for what's going on. In 2002, the S&P rallied 23% low to high in the summer, and then it just crashed. So, yeah, anything's possible in the markets, but there is a history going back to 1960, particularly in 73.4, of rallies of anywhere from 13 to 20%, and it's still a bear market. So, hey, look, if I had a crystal ball, I'd probably get up late and miss the show, but I don't. All I can go is based on the probabilities. And yeah, this is an impressive rally, and I think it's a chance to get a little bit liquid and pare back stocks that haven't been performing. When you take a stock like Lurid and it hasn't rallied in this swing, then you got to question, when will it rally?
Yeah. If your stock hasn't rallied in this last 3 weeks, you're definitely
something's not right.
something broken there. So you might need to check that out.
I think you've got to look at themes. So I love telehealth and biotech and where that's all going over the next 5 to 10 years. I love cybersecurity. So you look at a stock that I've pounded the table on, Doximity, was wrong from 100 all the way down to 28. But this chart's starting to look good, DOCS. This is the future. This is telemedicine actually making money. It's not really telemedicine. It's Facebook and LinkedIn for doctors.
Yep.
And my point being, and they make money. They made money from almost the day they were started, went public a little over a year ago. Find stocks like this where you really believe in the fundamentals, and then buy the real dips. And that's a pretty decent chart pattern. And it's not exploding. It's not at a 52-week high. That would take it over 100, which is not happening anytime soon. But buy stocks like this on a 10% dip. And they can happen in one day. If you get a day where tech is weak, then stocks like this. But don't buy something like APPS, which is a broken angel, that's not rebuilding a really good chart.
Mark, wasn't the one you gave us to EPAM, which was a good
one? EPAM, oh yeah, that's
like you gave us that, I think, at like 250 or something. It's 395 here now.
Yeah, and that's they had all their programmers in the Ukraine, or most.
That's right. I remember that one.
And Russia. Thank you for that. This is a real company. Now, was it overpriced at 720? Yes, but was it underpriced at 250? Absolutely. So again, with the notion that there are really only 20 or 30 stocks you want to be dealing in, for your investment side, it should be fewer than that, maybe 10 to 20. And so I have stocks like EPAM and Doximity on my radar screen. I've actually got Tesla on my radar screen now, but that's not coming down, unless the market comes down. So that's my point of view. And getting back to what's driving the market, there was a bigger correlation, Dennis, which was the US dollar. And that may have broken here in the last few days, but not by much. When the dollar weakened, the market rallied. Now, often that's tied to the price of oil. So the two are like cousins, if you will. But it's that weak dollar that you're looking at there that really helped the market.
Definitely. I was going to point to that.
And there's an interesting phenomena. Typically, the market has gone up in the non-traditional hours, the S&P futures, and then down. This is in the last 2 years, and then down during the regular session. So all the gains have been made overnight because of the dollar primarily. So when the dollar is strong, they're selling US stocks to get dollars because they want to be in dollars, the big traders and the European banks. When the dollar is weak, they don't have to sell stocks overnight to get dollars. They can actually buy them. And so there's just an internal dynamic, but we'll see how this plays out. But I would watch the dollar in addition to oil. I agree with you. Energy has been a driver here. But again, if interest rates are going up, and this rally has come in the face of the 10-year rallying, I think 25 to 30 basis points.
Yeah.
And that's a little troublesome because that's the market telling you, okay, we know interest rates are going up. Well, if interest rates are going up, then PE ratios for tech typically come down. So there's a lot of cross dynamics, which is why I always revert back to the technicals. And if we see the Mcclellan summation index above 800, then I'll reevaluate. It's at 368 right now and rising every day. I think I've acquiesced you guys into submission. I've never seen that before.
Sorry about that.
We all thought somebody else was going. Usually I jump in all the time.
I'm looking at initial jobless claims. That's what got my attention there. So I'm trying to grab us our initial jobless claims that are hitting the tape right now. But definitely that's one thing that I was watching. I know that Kramer went on yesterday talking about pointing at a rally in gold, maybe probably looking at that dollar there. What do you feel about that one, Marc? Do you feel that's a little bit of a wild call there, a rally in gold?
Hey, gold was oversold, so sure, it's possible. All of our power gauge ratings on the gold miners have turned bearish in the last month or so. So they had been bullish in the spring up until maybe an April peak, but I'm not really good on gold.
Just rallied $100. So I mean,
all right,
you know.
That's not Kramer, but
right. No, last week it did.
Yeah. So let's see where we play out here in 2 weeks, and good luck. I'd be raising cash here.
I am too.
Stocks.
That's what I think it's prudent. I mean, we just had a 19% rally to Mitch's point in the Qs. I think it's prudent to take some cash and take some chips off the table. I mean, if you've been getting hit all year and now you're like, oh, I'm starting to feel a little bit better about my portfolio. I mean, how many times have we seen this in this bear market we've experienced in the last 8 months where it goes down and then it starts to come back. It's like, oh, okay, here we go. We're going to get the V bottom, and then they just pull the rug out again. I'm just, waiting for that next rug pull. And maybe this is going to be different. And maybe we're going to have a V bottom. Maybe we're going back to all-time highs. But I mean, there is so many hurdles to get over with the higher rates and inflation still up there and the whole China situation, the war in Ukraine. It's hard to just add up the math to get to all-time highs.
Agreed.
Something we're definitely going to have to keep watch to see how this market reacts. So I'm going to go ahead and get you out of here, Marc. We're going to pay attention to the jobless claims and catch some other earnings. Always but appreciate you like always, Marc. We'll definitely have you back on. All right, guys, let's go ahead.
We got another purchase here. CCXI looks like it's going off the board here. This has been the driver for XBI here, is that you're getting M&A now happening, these beaten down biotech stocks. And we didn't have a chance to talk off the bat. This news hit right at 8 a.m. So right when we're getting ready to start the show. But you got Amgen going to acquire CCXI for $52 a share in cash. That's 100% premium. We also have a rumor that GBT is in play here now too, which is Global Blood Therapeutics. So what you're seeing, and this is maybe indicative of, a little bit of a turnaround story in the overall market, is you're seeing companies, beating down biotech names, really starting to, get some looks from other companies like the big guns. And I mean, XBI has been built, this recent rally in the last month and a half on XBI from 62 to 85 has been built a little bit on a few M&A deals. And maybe that continues to happen here because You know, the prices on some of these beaten down the biotech names have just gotten too cheap. So we get another one, CCXI and GBT in play too. So XBI up substantially on that.
S&P is getting a little bounce off the jobless claims, up
Little bit.
6,000 to 260. Just kind of meandering. Got near unchanged. They like that unchanged and just rallying back here into the 4160 handle.
They're finding reasons to buy stocks. They're going to continue to find those reasons. Again, I'd say if the China situation, if I wasn't so worried about this, and I keep reiterating it, and I may be wrong, there's a lot of reasons, you know, to own stocks too. I can give all those reasons, you know, that to not own stocks, but you know, the reasons to own stocks, the main reason that commodities have come down. And that's next CPI report, which a lot of people are anticipating. I mean, the rating's on the wall. It's coming in. I mean, it's going to come in probably light. It looks like it's going to come in light. I mean, if you're anywhere where these commodities are affecting it, you've had commodity deflation here, you know, coming for the last month and a half here now. So, I mean, when did oil top out? I mean, we're going back to beginning of June. This is going to start showing up in the data. So that's the one thing when we get this next CPI report, which is it next week, Mitch?
Wednesday, coming on up.
1 week. I think you got people, you know, don't want to be short on that situation either. So that is a catalyst. You see that CPI come in light, which I believe it's going to. It could rip stocks there
How
too.
light, I think, is going to be something also paid attention
That's
to.
important as well. And you know, we're not just going back and all of a sudden it's back to business as usual here.
It's not going to be 2%.
Inflation is here to stay. But
Yeah.
I mean, the one good thing is commodity prices have come down substantially. I mean, you can just go across the board from lumber to, you know, to agricultural to, you know, wheat to oil. You know,
What's going to be the sign that I know inflation's peaked? Dennis's house is done.
No, well, that's it. I built my house in the most inflationary. Yeah, so if you want, I'm a pretty good stock trader. I'm terrible building houses. I'll tell you that right now. Just terrible. Built the top on it all. So, and it's going to be done. It's supposed to move in 2.5 weeks here. So,
I'm excited.
Really?
That scares me about inflation.
Yeah,
though.
no,
that
scares me too. So that's going to be the peak inflation. Yeah,
Is that with or without the oven?
Oh,
I know the oven's not coming in, Joel. The oven's not coming in. We ordered it a year ago, and it's definitely not coming. The front door too. Front door. So I told you, product delays.
Front door, no oven.
Yeah,
outdoor
no front
kitchen,
door,
man.
no oven, and there's something else missing too, which I don't even remember now. But there's, you know, that's just supply chain issues. You know, when you're building a house, you have supply chain issues. We've had it all the way along, but you know, we can live without a front door, I guess, and we can live without an oven.
All right, let's bring us to some other earnings here. Let's go to Eli Lilly here. EPS coming in here at $1.25, missing the $1.69 estimate. Sales at $6.49 billion, missing the $6.7 billion estimate. They lowered guidance there on the adjusted EPS for the full year 2022 to a low end of $7.90, and the estimate was $8.08.
I've been selling all my long-term pharma stocks. And that's what I really have been selling here for the last little while. I hedged my Merck. I mean, and again, I just had a point here, and it's not like, you know, I think this is going to be an epic crash, but I think these stocks all sit near the highs. Now I think it's almost like I feel like they're lose-lose trades here now, because if the market turns around and starts really hammering, you know, for whatever reasons, you know, China,
they'll get hammered.
They could get hammered with it. And if we're going into a rah bull market, these aren't the stocks. They're crowded. That's where money's hiding. So there's too much money hiding in all these things now, and they've had good runs. I mean, Lilly has had an impressive run. You're coming in and investing in Lilly now. 2021 is $150. It's $300. This bloody stock has doubled in a year and a half. It's pharmaceutical stock.
Pharmaceutical stock.
Yeah, they don't move like this. I mean, Merck is a little bit, it hasn't moved quite as much. But, you know, from 70 to 95 is a pretty good move for Merck because it's mainly a dividend play. I mean, it was 4.5%, 5% dividend. It's moved up so much, it's only a 3% yield here now. Pfizer has had all the love from, you know, the obviously COVID shots and all the other things, and starting to not look healthy on the charts to me here either. And then I've had AbbVie for a long time too. I sold part of my AbbVie before the print because I was nervous going into it because I just feel like they're hitting pharma stocks on the prints. I sold at 149. It's now 141. So I've been lightening up. I still have lots of positions. I still have Pfizer. I still have some longer term positions in pharma, but I just don't want to buy pharma stocks on this. Lilly isn't the stock I'm looking for in a pullback.
I mean, this is no man's land. I mean, you talk about no man's land. I mean, look at that run this thing had off the July low, right? From 285. Pre-market low, I mean, a day like this, okay, you're 293. So you're 14 bucks off the pre-market low. In my humble opinion, you're going to have to pick an intermediate level ahead of that to get back down to the pre-market low. See if there's even a daily low in here. Not much. I think overall, I would just go 285 to, the whole. If you really want to own this, let it come down 50%. Let's get out the tool here, the retracement tool.
I love your
off
50%
of-
retracement.
Yeah, just got to get the
I have to do
line
that
right
math
on
in my
top.
head. I need a 50% retracement tool.
There you go. Boom. 310. I mean, if you've been waiting, if you really if you had a short on this one, you're opening right into your June 23rd low. If that was your target, then I don't think it's going to hold right there. But this might be one where you open lower, you flush out some stops, you go down 302, 303, something like that. Then you come whooshing back up through the open. In one possible scenario, pre-market low is always a good target. Just doesn't feel like it's going to get there.
Yeah, I wouldn't be fighting that too much. It looks like it's already back.
I did see the CEO, and I tell you, I don't listen to much on CNBC, but I really like the CEO. Like they were trying to dog him with
He
questions.
was in full damage control this morning too, though. He's like, I think our guidance is pretty good.
Yeah.
He's like, and the stock started rallying off of that too. I mean, there is a trade-off of those interviews on CNBC when they get them on there, and and something gets said. I mean, even opinions from like Kramer, and they move stocks. I mean, if the stock's wishy-washy and it wants it doesn't know which way to go, and then Kramer comes on and talks about it, he's like, I hated the report, the stock tanks. I mean, it's crazy that, and then the media will come in the next day and say, oh, it was this that caused it. No, Kramer actually caused the stock to tank. It couldn't decide which way it wanted to go, and then it got the voice of opinion followed by millions of investors that said, no, I hated the report, and it tanked. So I mean, you have to, even love Jim Cramer or hate Jim Cramer, you have to respect his influence on the stock. And he moves price. So that's why you've got to watch him. I mean, on those interviews when he's talking about a stock specifically, and if the stock's down and it's getting hammered on millions and millions of shares, he's not going to have any push on that. But when a stock's just sitting here wishy-washy and is trying to decide, oh, does the market like it, doesn't like it, and somebody comes out, I love the report, it rips on it. So these are all just edges that you have to understand as a trader.
Well, I don't know if you're going to be buying this push in pre-market, but did you see Baba today? Alibaba holding adjusted EPS coming in here at $1.75, beating the $1.52 estimate, and it's pushing right now. You guys can take a look at that. Sales at $30.69 billion, beating the $30.05 billion estimate. Back above 100.
It turned. To me, it turned. And it's moving up. Where it's going to stop, I don't know. Not buying it up $6, but it had that look. Oh, it looked great. 125. We're breaking out 2 days range down there. Boom. Oh, at 90, we're going to 70. Find some support. So looking for this. It's already in the $100 handle. I think if you're looking for more on the upside,
do a 50% retrace on this, Joel.
It's all of this move here.
Yeah,
the most recent one
from the 124 down to the 87, just to give us a feel, because you're going to be not that. You're
107. Yeah,
so if it gets silly town, that's where you start unloading.
Yeah, that's what I would think too. And look at the lows. Nice call down to 661 and 716. Those are your highs on the 20th and 21st of July. So Baba on the rebound, 3 million share. Boy, they're swinging some shares around on this one.
All right, so this next one up got a new name. It's no longer Penn National Gaming. It's Penn Entertainment, baby.
They changed
their name. Changed the name, baby. Penn National Gaming EPS here coming in at 15 cents, missing 56-cent estimate.
I like that name change. Yeah, it's not like square to block.
Well, I mean, maybe if they bring, Portnoy back, smashing some hammers, maybe they'll get some entertainment.
I like that. Yeah.
Sales at $1.63 billion, beating the $1.61 billion estimate. They reiterated guidance. So it's not looking too bad. I know that today is the Hall of Fame game, like Joel reminded me yesterday, and it's the first preseason NFL game. So you probably are going to see a little bit of lift. And just to kind of give it, let me give it with pen is MGM Resorts numbers.
Sure.
EPS here coming in at 3 cents, not compared to the 26-cent estimate there. Sales at 3.3 billion, beating the 3.04 billion estimate for MGM Resorts.
Okay, I know these stocks have rallied, but
I sold mine. I
know
sold
you
mine.
did,
It
you
was a
did,
nice
but,
trade.
like, how many people are betting on preseason football games?
Joel, the
They
thing
think
here,
they have an edge.
People like
They think they
betting,
have an
man.
edge.
Joel, it's just the addiction. It's the addiction. If you're addicted to betting on the NFL and you just got the opportunity to bet again, baby, you take that opportunity. Just like day traders love to trade. And guess what? A lot of times, what do they have trouble doing is not trading.
Oh, they do. I mean, there is such a gambling aspect to life in itself. I mean, life is a gamble. Every time you do anything, it's really a gamble. But people like gambling on sports. Like, I've never been a big gambler, but I have lots of friends that got their apps and they're sitting there and betting on everything. So there's more people gambling than you think. So I know you think it's going to go away, but I don't think that's the case. I think people gamble more when they're having money trouble because they think this is going to get me out of the money trouble. So it's been an impressive move. What about DKNG? Look at this move the last
It's
3
been a
days
nice
here,
move,
Joel.
yep.
I'll flex.
macro.
I'll flex when I can.
There you go. Did you have this one?
Come on. Dennis
You had
already
this one?
sold it, baby. 20%, 3 days.
There you go.
That's how
See,
you
Money
swing,
Mitch makes some
baby.
good calls, man. That's a nice call.
Swing
nice trade,
trading.
Nice trade, Mitch. Nice trade.
No, this was all
it was
about
setting up well.
this look for the NFL. And so I've talked about this as a yearly trade going into the preseason. We usually get some lift. I took it based on that. Another thing that helped it, of course, was an up market, right? If we were getting crushed, I was concerned about it, but we kept coming up there. I sold it yesterday right into that push into 1690. I got 1690. Top of the day, 1691.
Wow.
I'll take it.
That's rare. 17 is rare for anybody to get the top because usually it's only Citadel or Virtue that get the top.
Well, I mean, there's not that many shares. There's not that many shares.
Traded it did trade up to 1740 this morning, just a tick above that.
Just to make me feel like I missed out on some juice.
Well, let's see if you come back down to come back down to the top of yesterday's range. I'm looking at this. I mean, it's still in an up mode, right? Up 28 cents, trading up on the close. We'll see if there's some more serious sellers here at 17 off the open, because you did have a couple daily highs in that area.
Yeah, not too bad from 1380s. I'll take that anytime. Let's take a look. Let's get out of the gambling stocks. Let's go to Wayfair. Wayfair is an interesting stock here. Missing here at $1.94, missing the $1.89 estimate. And these were loss, right? And sales here at 3.28 billion, beating the 3.19 billion estimate. Wayfair, what do you guys think now?
I can't fight the buy the dipper, so I'm not going to fight that trade that's working. I mean, Datadog too this morning was down on $100. We had somebody in the chat bought it on 100. Congratulations. It's 112 or 106 here now. So, I mean, this is just tough to like fight that. Like, stock goes down 10%. You're shorting them now. I mean, that might have worked, a month ago, but shorting them in the hole here right now has not been the way to make money. It's like fading everything is really, like, let's be honest here. Fading everything is still working. Buy the dip, sell the rip, short the rip, buy the dip. I mean, it's just been working. So I'm not coming in and shorting something down 9%, just like wasn't coming in on Lucid, even though Lucid's still holding the support, same exact price. I just can't bring myself to just chase stocks in this environment. Chasing in 2022 has been the path to ruin for traders.
Pulling back here, boy, there's not much in this area as far as daily lows go. We do have a pre-market low at 57.20, so we will keep an eye on that. Your 50% retracement. Well, yesterday's low. Let's see what happens at yesterday's low. If the buy the dippers are going to step in here, boom, it got there in the pre-market, and then it's holding above it at yesterday's low. So we'll keep an eye on that. If you do get a rally, a lot of green candles coming into this. Let's let's see. We gave everything back. Wow. The street was leaning the wrong way into this one. Had that big up day yesterday. So don't know if you're going to see that that closing price is 64.44. And just the other thing, Dennis, to what you alluded to about, selling these stocks in the hole, the market structure's changed. These stocks have bottomed. They've come off the lows. People have, shorts or people looking to
They're
get long. Got to
hungry
be
on the buy
taken.
side.
Yeah, they're like, oh man, if I missed Square, or I missed PayPal, but man, if I could get a pullback here, and
Yeah.
I think that's kind of what
Yeah.
you're seeing. Whereas on the way down here, in Wayfair, like, where's the support? Well, where's the support? Well, now you can look on your charts, even on your monthlies, and you have a couple lows in the same area.
Definitely, I would agree with that. Keep watch on that. A lot of buy the dip mentality, and you see it even in bad earnings. It comes down, it comes back up. Good earnings comes down, comes back up. The logicalness there is kind of getting off of and it's more the buy the dip. Let's go towards booking holdings. That's an interesting one. A really good beat here on this one. The EPS here coming in at $19.08 there, beating the 17.56 estimate. So big beat there on EPS. Sales at 4.29 billion, missing the 4.3 billion estimate. And you would think if we're going in a recession, probably this is heading down, but I don't know.
Well, that's what it's doing. They pulled the rug out. So I was watching this yesterday, trading up over 100 points on their earnings report. And again, we get the rug pulled. Fade trade continues to work on both sides. People who are just selling that rip up at 2090, 2-0. So it was up 130 points almost, 125 points on this earnings report. And then it started to leak. And it started to leak and started to leak. And then I was like, it dropped like 100 points. So I was like, this thing's going to go red. I'm like, this is actually going to go red. I bought TripAdvisor off of it, and I was playing Expedia off of it too. And I'm like, I got to get out of these because this booking, this leader is going to turn red. And sure enough, then they really pulled it. Once it went red, then they pulled it down and they knocked it down 80 points. Like it felt like seconds. So, I mean, now it's trading down on an okay report. So it's the fade trade just continues to work. We can say, oh, bull, 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 but fade, 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 working on both sides.
Well, is the fade on value still continuing to work? If you take a look at Clorox, let's go to Clorox, EPS at 93 cents in line there, sales at 1.8 billion, missing the 1.86 billion estimate. Clorox sees full year 23 adjusted EPS at $3.85 on the low end, high end $4.22. Estimate was $4.11.
Stock is not cheap. These consumer staple stocks, and people are hiding in these things with these multiples trading 20, 25 times earnings. I mean, so it's going to make how much is it going to make this year? What's the P on this sucker?
Oh, let's take a look here.
This is not a cheap stock.
I haven't seen it in a little while.
I'm going to look. What is the P on this thing? I don't feel like doing the air math. I'm just looking it up. But if they're making $4, it doesn't sound like a cheap stock to me.
I think I got 28.
Yeah, you're coming in like the PEs on these things. I'd pay 28 times earnings for a consumer staple. I mean, I don't know what people are doing. I don't get it. But anyways, I don't know. They buy the dip on everything, so I'm not going to fade it. But I think there's a lot better. Like who's buying the tape back in 2021 at $230 a share? I guess they thought maybe COVID was coming back or something. Maybe then I have no idea. But holy macro, stock is not cheap.
Someone asking, should I buy DraftKings today? We can't tell you what you should buy or shouldn't buy, but at least in my eyes, I think you'd be doing it wrong if you're looking at DraftKings today. But
yeah, you're chasing now.
We'll see what happens. Like always, it could get up there. Could be people still not paying attention to that NFL trade. We'll see what happens.
The setup was for Mitch 3 days ago when you were just bunching up here against resistance of 14. Then you got the breakout and boom, and then you're off.
Exactly. It gives you levels to go off.
You had a catalyst with the NFL thing too. It just set up well. Great trade, Mitch. That trade, but Mitch just booked that trade. So now you're coming in. Now you're coming in, and you're like, okay, you're actually buying it from somebody who's made the trade already. You're like taking, you're taking the other side, the person that just booked the 20% gain. That's chasing. I don't chase stocks. Obviously, you can do whatever you want. You can put on any trade as long as you know where your out is. But it's hard to control the risk on this puppy now because it just went 17.11. Even to come back down to 15, well, it's still in breakout mode, but you just lost $2. So you almost have to wait for a pullback, in my opinion, on this thing now.
All right, let's take a look at Walmart as they've begun to lay off corporate employees. This was confirmed by CNBC. Of course, the reason why they're saying it is because a pullback in discretionary spending due to inflation.
Joel, I don't know.
Too much.
It's
think
come all the way back. So they
unbelievable.
warned, and it came all the way back, filled the gap. And now it's like, okay, well, does it continue or is it giving it back? I think this is a pitch in the dirt. I don't know where this is going. This will go anywhere.
I mean, I just think from the last two news you got out of the company, the lower guidance, not good news, and cutting 200 corporate jobs sounds like to me is that they don't plan on making as much money, and they want to start trimming some fat and trimming some expenses. So,
Yep.
I think what the company's telling you is that things aren't so rosy. So. I think I'd go with what the company's telling me as opposed to, just randomly thinking Walmart's coming back. And bought the dip, it came all the way back. Maybe get a nice trading range in this for a period of time. Maybe get back down into the lower 120s and bounce around between 122, 132, something like that. But not good news from the company. I'm not rushing out to buy it.
It's already had the rally off the dip. So I mean,
yeah,
I'm at this point in time. It's just there's sometimes just not a trade there, and that's what I would say in this case. It's just not a trade here.
All right, this is something that I'll keep watch. It's definitely been getting negative catalysts lately, but we have been seeing other retailers not looking too bad. So it's an interesting story that Walmart is continuing to struggle. All right, after the close today, we'll have Twilio, Lyft, and Beyond Meat. So pick one of those, Joel. Which one do you want to touch?
Twilio, probably don't even have to look at the charts. Probably had a little bit of a rally, low expectation. Yeah, nice coming back from 80 to 100. I mean, a nice pop on this, and they love the report. I'd keep a close eye on 110. Easily could go there. I see a bunch of highs in that area, and then I'll just stick with this scenario based on what it looks like it's going to move a little bit higher today. But let's say we make 100, the high today, low 80, you get a dip in the 90, 91 area. But that's just the way these, I'm just going based on what some of these other tech stocks have done off the report. And then, if they dip, well, it's been bought so far. If they rip, there's always people willing to take a profit. And that 110 is really sticking out to me.
Somebody wants to talk Square. I'll talk it too.
Sure.
I have Square. I bought Square, I think about 12 trading days ago or 13 trading days ago. I think I paid $64. It's $88. I mean, I don't know what I'm going to do here. I put in the long-term account, but I just, I'm up like 30% in 2 weeks, and now I have to go through a report. I almost wanted to sell it and see what happens with the report.
What account is it? Is it a swing account or a long account?
I put in the long account, and I just put the partial position. So it wasn't a swing trade. I'd be gone. A swing trade. I'd be gone, Joel. I'm trying to separate it, but I mean, when your stock goes up 35% or 30% in 2 weeks, and you're going to take it through a report, the expectations all of a sudden were in the gutter 3 weeks ago. Now they're high. PayPal just put them high. I mean, talk about the PayPal versus Square. PayPal gets the move, takes off. Square is up in sympathy. Then Square ends up closing up more than PayPal. I mean, that's how hungry they are for stocks. I mean, now expectations are high for Square. So I'm scared to take it through the report. So I think I might book the gain on my Square. And then I think, again, the China situation is influencing me too, because I think there's going to be this overall rug pull. So it's influencing my whole plot, which I might be wrong. I might be wrong on that, but I keep coming back to that. It's like, I don't mind taking profits on stuff right now because I'm concerned overall that we are now back in the woods. We are starting to come out of the inflation woods. I think China's going to throw us back in the woods. Yeah.
The true China scenario, that you got that would have been discussing and talking about, then why would you want to own absolutely anything?
I don't.
Why would you be 100% cash and
well, I tell you, and we've had this conversation. I never go to 100% cash in my long-term portfolio because it is the worst case scenario if stocks go up, because then everybody else is getting wealthy relative to you. and you're worse off than everyone else. I mean, it's not like it's a competition, but in an inflationary environment, and now everybody else, everything inflates more, and you're left in cash, which is holding the dust. So my long-term account, I never go 100% cash just in case you're wrong. I never go all in. 100% cash is an all-in bet that there's a massive sell-off coming to the markets. I adjust it. So I rarely go even 50% cash, but we know I did that in the recent sell-off. I'm back up to 42% cash because I'm worried. I don't think I'm taking it to 50 though. I'm not as worried as I was before. I was 52% back in June. I bought a bunch of stocks in June and July, which ended up helping my whole portfolio because obviously, I was down in some of the stocks I had bought before, but stocks like AMD that I was massively down in, I added to it the Cathie Wood style, and they end up coming back, and I end up basically scratching the trade. So, or scratching it out. And I still have a little piece of it, but that's just, the stocks just come back up.
Leave Cathie alone. She's not looking too bad anymore.
He's killing
Dennis.
it, man. We called the low.
Did you see
called Cathie low?
I can give it to you, but at the same time, you give it too much crap, so I'm not going to give it to you, Dennis.
I do give her crap. I said I like Cathie now. I'm liking Cathie. I even sent her. What did I say? I sent a nice tweet on something. She said that made sense for once.
Did you see Coin take off there, guys? Right, Coin, for some reason, is taking off. The only thing that I have on Coin right now is a tweet that is out there from BlackRock that BlackRock's clients will have direct access to crypto markets through Coinbase Prime. And Coin is ripping right now. I saw the chat catch it also. This is the only thing that I see out there right now. If you guys see anything else, please let me know. But
I might be the worst crypto. I might be the worst crypto trader on the planet. I might be the worst Coinbase trader on the planet because I bought this thing and then I sold it, and I've sold completely out of it. And obviously,
didn't Cathie get out of this one though?
Yeah, me and Cathie, we suck at trading Coinbase. Whatever I say on Coinbase, do the opposite. I suck at trading this thing.
What do you think of that chart, Joel?
It's moving up. Off the possibility that people are going to be trading crypto through BlackRock, through Coinbase. Just 89.38 would be my short-term target here for today, and after that, things really open up. But nice lift, 1 million shares on the news. Make sure it takes out the pre-market high.
All right, that's going to do it for us. Like always, I want to give you guys a chance to talk about what is coming up on August 18th. What is that? What are we going to get into, guys? What should everybody be watching?
Right there.
Yep, you got it right in front of you. And Mitch, we're gonna have a great promo coming out for this later on today.
Stay tuned, guys. We got a high energy, really fun promo coming out for this soon enough. But like always, guys, check out the introduction to swing trading. It's gonna be really fun with Pre-Market Prep, hosted by none other than, yes, I said it, guys, Spencer Israel. You guys don't want to miss his return there. Joel Elconin, Dennis Dick, Rob Friesen. I love the combination of these three traders as you guys see them on Pre-Market Prep. And if you guys haven't caught Rob, I would definitely tell you guys to go to Pre-Market Prep Plus and just check it out one time. If you guys feel like you don't get anything from Rob, well, let me know because I'll probably watch that one and get some out of it myself. I love the way he trades. He always focusing on seasonality, rotation, and how you can use different kind of hedging vehicles. So check that on out. Of course, you'll get Dennis there also taking a look at it and some technicals by my man, Joel Elconin.
Okay. I got one housekeeping item. Want to wish my mother a happy birthday here today. Yeah. And,
I wish I would have known. I should have got the happy birthday going here.
You're going to get the happy birthday going in the background. So Mitch is always usually ready on that stuff. But no, I didn't give you the heads up. So happy birthday, Mom. And happy Mitch, birthday. Fabulous job as always. I'm telling you, Spencer ran the show for like 7 years. Mitch has come in, big shoes to fill, but he's doing a fabulous job doing it. So thank you so much.
I'm trying. Like always, we got to improve, get 2% better every single day.
We're trying. That's all we can do.
Catching the numbers and getting into you guys fast, talking about all the topics that you guys want to cover. And like always, trying to get to getting the most out of Dennis and Joel, which is the reason why we're all here and we hang out here every single day to get some wisdom from these guys. Appreciate you, like always, Dennis and Joel. I know Joel already hopped, but like always, Dennis, definitely thank you for coming on every single morning and doing this with us.
Good luck, everyone.
All right, guys, that's going to do it for us right here on Pre-Market Prep, the #1 morning show to get your morning started for the markets. Now, let's go ahead. Let's dive into this market. I got Zunaid, Ryan, and of course, I will be joining you guys on live trading. We've been killing it. I'm not even going to lie. We've been pretty good this last month and a half. Let's see if we can continue the rally in our own trading here, as we've had some really killer trades on, even the fast movers like AMTD. We were doing some swing trading. Come check it out, guys. We've been kicking ass. And taking names. That's really what we're doing. So let's go get back to it. Live trading. Meet me on over there, guys. And I'll see you guys right in a couple of seconds.